We're pleased to welcome now partner at Element Wealth, Jeremy Nelson. Hey, Jeremy.
Good to be with you, Gerard.
Thanks for joining us today. So I'm just watching the markets today. We'll talk about that first. It's one of those days where it has crossed the unchanged line numerous times already with, 3 hours of trading left. I'm not sure exactly what's going on. The NASDAQ has remained steadily in green territory. Bond yields are overall seem to be down. The Bitcoin's down. Ethereum is down a little bit today. What do you think's going on? What is this typical? Let me start with that. Is this typical as we're 5 months away from a presidential election? Does this kind of line up with what we've seen in past presidential election years?
Yeah, I think typically from a presidential election perspective, what you get is, positive start, then you get a little bit of a correction and a malaise, and then all of a sudden it starts to pick up, as you get closer to and through the election. Right now, we saw the market kind of jumped it early on. So we didn't really get as big of a correction or as long as a correction as we normally might. And I think there's just a lot of people who have the data now. So it's hard to look at historical seasonal cycles and think that you're going to get them exactly as we used to in the past, just because people were trying to jump them. I think you had a pretty big melt up in the NASDAQ and in technology. And if you look at valuations, they're very stretched. And we're at a point now where there's a little bit of profit taking here. We saw last week that we had a very significant correction, primarily in technology. We had some, one day where we had, the Dow was up, 500 points and the NASDAQ was down a couple percent. And so you saw rotation happening there towards things that were a little bit more fairly valued. I think as we go forward, that's something that we're going to continue to see a little bit more of, because the bar is set very high for these technology companies.
Yeah, no doubt about it. But good grief, the run we've had this year has been phenomenal. So if we have a couple of point pullback in some of those seven stocks, Magnificent Seven, you're still way up, depending on when you got in. And I think over the long haul, those are probably still good plays. They will catch up, I think, with their valuations. And these are all profitable companies.
They're all profitable, but I think if you go back and you look at periods, say like 2000, when you had the dot-com bubble unwinding, and I use Microsoft as an example, Microsoft peaked out over the next 14 or 15 years. They more than tripled their revenue, actually almost quadrupled. And we saw their profits increase by 2.5%, 2.5 times, and yet the stock ended up in the same place. And so I think what investors have to be careful of is just looking at a chart and thinking that that's going to continue, because, eventually when you have high multiple expensive stocks, the earnings have to catch up. And a lot of times you'll get a move like we're having right now, and the value of these companies will reflect really what they're going to be worth in the future. So it really limits the growth.
Well, and do you think perhaps, Jeremy, that given the overall macroeconomic conditions, that maybe investors feel like there's growth opportunities in industries other than tech, which is typically where folks have invested for growth versus value?
Yeah, I think the real winner of the technology revolution and AI is going to actually be the broader economy. So everyone's hyped up about anybody that says AI in their earnings report or talks about it or talks about chips. But I think what people miss is that a lot of this is going to become a commodity at a certain point in time. Just like the computer was revolutionary, but it's now a commodity. And so I think that the big winner is going to be other sectors that are going to be able to take this technology and become more productive over time. And so I just feel like investors, if you haven't been involved in this big tech run, it's okay. Being a good, solid, fundamental value investor over your lifetime is going to work out well for you.
Right. Yeah, agree. And that you're so right. I think about just my history in the technology business of so many industries that were positively impacted by all of these inventions, honestly, going back to the 70s and then really took hold in the 80s and 90s and then ultimately the internet, which all these businesses benefited from dramatically. In fact, it served as a launching pad for brand new businesses we never even thought about before, industries we hadn't thought about before. I feel like that's sort of where we are with AI, and I think that we're just getting started.
Well, yeah, and I think that Cisco is a great example, right, of what they were back in the late '90s and 2000, and they're still a fantastic company, but the stock really never got all the way back.
Yeah,
And
you're
again,
right.
I think investors have to be careful. I think investors have to be very careful with what they pay for companies. You can't just look at a chart and think, "Oh, this thing's going to the moon and it's going to continue."
Yeah. All right, let's talk about politics and how that affects the markets. Do you think that the markets are in any way reacting to Joe Biden's announcement that he's withdrawing and that it appears, by all accounts, that Kamala Harris will be the nominee? Is the market reacting to that?
It seems like the market's really taken this in stride. Obviously we've had a couple of massive political events, right? The assassination attempt on President Trump and then President Biden resigning here. I think that, we got a little bit of a bump because Trump's popularity went up after the event with him. With Biden resigning, he's very anti-big business. And I saw an interview with Jim Cramer from CNBC where he was talking about, Vice President Harris, how she understands, the need for the big tech and the mega caps a little bit more maybe than President Biden does. Ultimately, I think that we're still on a lot of social issues at this point in time in the election, and we're not really talking about how we're going to address the debt and the deficits. And, for me, I think longer term, that's the thing that I worry about more than anything. But I would say this, I still think that President Trump wins. I think that he's really increased in popularity here. I think he won over some moderates. He showed, a lot of resolve and something inside of him after that attempt on his life that I think some people might have questioned. I think that, he increased in popularity there. But I think what President Biden stepping down does is it might change the calculus a little bit on the House. Because I think for the Democrats, they were very concerned that President Biden's popularity was waning so much, people were pulling out from supporting him, that it was really going to go down ballot into a lot of congressional races. And I think that this potentially makes a lot of the congressional races a lot closer in some of the swing states. And the probability of a divided government is a little bit higher today. And the market typically doesn't dislike a divided government. And so I think that's why you're seeing a little. Exactly. Nothing, right?
Nothing.
Because it's
That's
hard
right.
to get anything done.
Yeah.
It's hard to get anything done. So, it's going to be interesting to see how this shakes out over the next couple of weeks.
The one thing that may sort of counter the gridlock play that investors typically like is the fact that we've got the individual provisions of the Tax Cuts and Jobs Act set to expire at the end of next year, and action is necessary to extend those, or else we go back to the Obama era tax provisions.
Yeah, and I think that's a great point, Gerard. And I think the market was getting a little bit excited in my mind because as it started looking like, hey, down ballot, the congressional races were looking really good for the Republicans. And if you got a clean sweep, then the probability of passing or extending, the Trump tax cuts was going to increase. Now it's a little bit less likely potentially, but again, we haven't seen any polling yet. I mean, this is all still so fresh. And I think yesterday, a little bump in the market really just had to do with people buying what they thought was an oversold market last week. And I think the market will start to digest a little bit of the politics in the coming weeks as we get a little bit more clarity, because this is still pretty fresh news.
Yeah. Absolutely. Well, always appreciate having you on and breaking all that down for us, Jeremy. Thanks a lot. We'll be talking to you soon.
All right. Thanks, Gerard. Appreciate it.
Folks, we're stepping aside for a break. We're in the Element Wealth studio. We're coming right back.